Meanwhile, looking at the overall economy, there's a fascinating piece by John Authers, Authers, in the Financial Times. It's in their smart money section. It was on January 4th. It was, 3 days ago, 2 days ago, day before yesterday. And the headline is U.S. business has to come off the fence on Trump. And basically what he's saying is that, the stock market has been going up and up and up. It's flirting with 20,000 now, an all-time high. Apparently because everybody's betting that when Donald Trump becomes president, that the Republicans are going to pull a Ronald Reagan, that they're going to say to hell with the national debt. In fact, they already have changed the rules in the House so that anything that raises the national debt gets hidden from the American people. That they're going to go hell-bent for leather, just like the Republicans did under the Reagan administration, and they're going to spend like crazy, which will stimulate the economy, which will increase the value of these companies. That's the bet they're making on Wall Street right now. And what they're not calculating, now this is not John Authers' point of view, this is mine. What they're not calculating, or the piece of the equation that they're missing, is the libertarian / cokehead legion. I'm lacking a word. Fifth column in the Republican Party, or third column in the Republican Party, inside Congress, who owe their allegiance not to the American people or even the people who elected them, but to the billionaires who made it possible for them to get elected, the petro-billionaires. So what's going on right now is that there's this assumption that everything is going to be wonderful, that the Republicans are going to, unlike the last 8 years, which has been austerity, 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 tamp down the economy, make things terrible for people, make people hurt, make everybody think that the Democrats are responsible for it, blame it all on Obama. We've figured this movie out, right? And so the stock market is betting that they're going to do exactly the same thing they did in 1981, which is what I've been saying for, since the election that they're going to do. And that is turn on the spigot. But the thing that could prevent that is if the so-called Freedom Caucus, the Cokehead Caucus, the Koch brothers caucus in Congress says, no, we're libertarians and we don't believe in deficit spending. Now, the thing that tells me that probably they will lose is the fact that that rules change already happened. Congress voted to change that rule, and it was like 238 to 180 something. I mean, it was a pretty lopsided vote. So the Republicans got what they wanted, that they would bury, that they would hide from the American people any increases in the national debt as the result of their efforts to repeal Obamacare. Because Obamacare actually reduces the national debt. It reduces our health care costs, contrary to the lies you've been hearing on, Fox News and others. But where it gets really interesting is John Authers. Okay, he says exactly what our company's going to earn this year. This cuts to the heart of the hopes that have taken over the stock market since the U.S. election nearly 2 months ago. He said the first stage of the so-called Trump rally appears to be over. Right? The Dow has not bounced up or down all that much. It seems to be floating right around 20,000. Then he says the market's shift in the past 2 months makes no sense unless investors believe in a hugely positive Trump effect on corporate earnings. Because, of course, that's the main thing that influences stock prices these days. Didn't used to be, but it is now. The trailing price earnings ratio, this is the, divide your earnings by the price of your stock. The trailing price earnings ratio on the Standard & Poor's 500 stood at 19 on election eve. It is now 20.5. Its highest since the tech bubble. In other words, stocks are overpriced. Stocks are not worth as much as they're selling for right now, based on just how much a company is earning. So it's got to be that they're building expectations into those stock prices. And some very big expectations, because as John Authers writes, forward earnings multiples have returned to levels unseen since the tech bubble of 2000. Which was a pretty big bubble and burst pretty badly. We kind of got distracted by 9/11, but there was a major recession in 2000. Remember George Bush, right after 9/11, they said, what should everybody do? He said, go shopping. He was trying to deal with a recession. John Authors then goes on to say, however, a strange exception is that a record 13 industrial companies. Now, the Dow Jones Industrials is a list of industrial companies, manufacturing companies. Okay, so we're talking about companies in the Dow, and it's the Dow that's hitting 20,000. He says, however, a strange exception is that a record 13 industrial countries have guided expectations downwards. This is the most since FactSet started keeping count in 2006. The FactSet is just a company that tracks this. As these are the companies, in other words, the manufacturing companies, right? If material costs are going down, if jobs are coming back to America, if manufacturing is going to be doing well, I mean, these are the companies you'd expect to benefit, right? And this is what he says. He says, these are exactly the companies which should be benefiting from the trends shown by rising metal prices and strong ISM numbers. And so this is surprising. The swell of optimism on earnings is coming from investors and their intermediaries, not from the companies themselves. And he points out that during the next couple of months, this is what's called the earnings season. This is when all the CEOs have to come out and say, here's how much money we expect to make in the upcoming year. And their stock price will change based on that. And so they always give an optimistic outlook because, you know, they always want their stock prices to go up. But, you know, what's going to happen when these earning calls start hitting the market? How far down can it go? I mean, this is going to happen after Trump is sworn in.